Instead of aiming for a 100% win rate strategy, which by the way does not exist ever in the markets, no one ever, no matter how much money you make from trading, has a 100% win rate. Try to go and aim for a higher RR trading strategy or system, because trust me, higher RR is proportionally, it scales and affects your EV much further and much more than just your win rate. The only problem I think a lot of people have with higher RR systems is low win rate, which again, like I said, is a mental edge thing you just have to overcome. But if you can get a good balance like me between my risk reward and win rate, I'm at about a 60% win rate. A risk reward is about 3 to 4 average. Then you have balance or best of both worlds. Anyway, I'm gonna go over how I was able to make this 7R trade here during ADA session or during new session, sorry, on ES, and very simple trade. I really did not do much on the setup, so let's get straight into it. All right, so let's go to replay mode here real quick and check out what I was seeing on the higher time frame. Now, first off, first thing to note here is my daily bias indicator is pointing bearish. Why did I take longs? Because you have to know we're trading on the 1 minute time frame. Our entries are on 1 minute, at least mine are. Okay, so if my entries are on the 1 minute, I would need to know when I should be bearish, when I should be bullish. The daily bias is telling me overall on the massive daily candle, is it likely to expand bullish, meaning close above or higher than yesterday, or close lower, bearish. Bearish means it's likely to close lower than yesterday's daily candle, but that doesn't mean you take shorts anywhere, right? You need to take shorts in premium, not in discount. Now, because you can see later, like if I zoom out here, we have indeed that bearish high time frame trend setting in. And I think I actually missed, unfortunately, the shorts on this day off this 1 hour PY, which is unfortunate. But anyway, let's go to higher time frame. So go to the 1 hour here. So we have this 1 hour here, a supply. So I was basically looking for us to go higher towards this 1 hour supply to then potentially go lower, but I don't remember why I missed the shorts here. I might have hesitated, I believe. Don't recall, or I got off the charts. But anyway, that's it. We're just going to go over this long today, or that I took on the 20th. So if you go to, let's see, which time frame. So you see how like there's no really demand you see much on here. I think there's a 30-minute demand, but that's about it, or 15-minute. But I found the 1 minute origin here unmitigated. Now open was around here. So usually for indices, this does not apply for gold, but usually indices, I like to wait for NYSE open typically, unless there's an A+ setup, then I can take it before. But usually I like to wait after the open, because usually the biggest move, if you're looking for expansion, which is what I usually like trading, the big move is not going to happen before the market opens, okay? Like, look at this price action before the market opens. It is a straight box. I bet you if you trade this, you might get chopped up, you might revenge trade. This is where a lot of people are just buying tops, getting stopped out, and selling lows and getting stopped out. So avoid trading consolidation when you see it. Just wait for a clear breakout or wait for when the time is right. So this is open here, and you see at open, there's nothing I was really looking at here. We just wait for price to develop itself. Like I said, I was really looking to see if we can take longs here up to that 1 hour supply. So what I did notice here is also, I think this is on the 30-minute. Let's see. I get better at labeling my PYs. 30-minute, yeah, so 30-minute 1 hour. So we have a 1 hour supply here right at 50%, which technically sure, this is premium, but it's not as ideal. So we have that 1 hour supply, but you can see at open, we broke above this high. If we were to hold this 1 hour supply here, we should not be breaking above this high here. We should be coming back respecting this supply and going lower, but we did not. So we broke above. Okay, now the fact that we broke above, that's when I was like, okay, time for me to look for a setup to go to the upside. So what I notice here is that we have the origin, unmitigated here, and we at this point develop trailing liquidity. So we start playing out price. Again, my indicator is taking a while to load here. I do have to delete a lot of drawings, but we put a price here. We broke above that high. So now I was looking for just longs here, and I started noticing this trailing liquidity here. Obviously, you don't want to get into a FOMO trade out of nowhere here, so I just waited patiently for this 1 minute origin. Just set a limit order here. Why? Because this is a A+ setup to me, basically. We have a lot of nice liquidity. This is not the typical liquidity sweep where you get like a big sweep, if that makes sense, like this. This is where it's just trailing liquidity. It's kind of like internal, it's just internal structure. You can even call this a stop hunter if you want, because this low did make a new high. So you could have taken this also as a stop hunter if you want to. But I did see this as trailing liquidity here. And so I took a limit order here. If I didn't get filled on a limit order, I probably would have had to potentially chase in terms of like taking an entry model. In case like we do this and then we get an entry model, I might try to take that as a stop hunter. Otherwise, I had a limit order here. This is the highest probability. And like I said, always give yourself some wiggle room, because in this case, you would have got lucky. You would have still been in the trade, but again, try to cover yourself either via the PY or some structure points like that low. And it hit TP very quickly. This trade lasted only 20-ish, not even 20 minutes. This is either trades you like to be taking, because they don't take too long and they go straight for a TP with nice momentum. Now, I could have targeted the 1 hour above too, for sure, right? Could have got 11 hour out of it, but 7 hour is plenty enough risk reward for me. Okay, I didn't want to get too greedy. And yeah, if it was like a stop hunter though, like if there's a stop hunter here, I would have taken the stop hunter above this high as well. So there are times where you can even juice out more risk reward if you take 2 entries. Take the first one to the high, then you take a stop hunter above that high just one time, right? Try not to take stop hunters too high up. Like once you tap this 1 hour supply, you don't really want to be taking a stop hunter, especially because daily bias is bearish here. We hit 1 hour demand or 1 hour supply, and we at some point later dumped. NQ did at SMT. So NQ took out this high here, basically causing an internal sweep inside the 1 hour PY. And we later just kept dumping, right? Price was very choppy, right? This delivery, I mean, it's not too bad. There's a clear direction. At least we're getting clear breaks to the downside, right? But it's not as good as this delivery here. Again, we cannot control how the market delivers, but you can control when you enter. When you see something like this, or this is not a great example here, because this is so tradable here. Because I see you have, let's see, this stop hunter here. We had this PY above, so you could have had a trade here. You also, did you miss this? If you missed this, it missed this PY here. There's a stop hunter above this high. This high internally made a new low. There's stop hunter here, and there's just a mitigation continuation here. So there are setups you could have taken multiple times. Actually, if you miss initial setup up here, but like I said, obviously it's not as good as if you just took an initial setup and price goes in your way. Because if you took this initial setup, right, you'd want it to go quickly and not like do all this like consolidation kind of expansion kind of thing. In this case, you would have got stopped out unless you covered a PY, which then you would be safe, but it's only 2 RR. Again, not a bad risk reward. If you're very confident in trade and you just want to give yourself one shot to take it, you can expand your stop loss. And again, I did make a new video on stop loss placements as well for those people that want to have an even higher win rate of how you can do this. So by sacrificing just a little bit of risk reward. But yeah, I believe I missed a short and took no re-entries. So anyway, that's what happened to price. Eventually took out this low. Of course, there's going to be fake reactions in the market, right? To fake you to the upside. That's why anticipation in price is key. You got to know the high time frame, direction, and you try to trade with that direction, essentially. So I hope you guys do enjoy today's video. If you did, make sure to leave a like on this video, subscribe, and I'll catch y'all on the next recap.